As we look back on the market this year, a familiar story emerges. A small group of big tech and AI-related companies has been the primary driver of major U.S. stock market gains in 2025. But investors are becoming more concerned about the technology's continued ability to deliver financial results. So what's driving the recent skepticism about companies in this space? And can AI-related firms overcome this cautiousness and see their stocks continue to perform well in 2026? Here are 3 AI trends investors will want to watch as we move into 2026. First, a small group of mega-cap heavyweights is spending enormous amounts of cash and debt on AI infrastructure. And investors are now asking more forcefully whether those investments will actually lead to faster earnings growth over the coming quarters or take longer to pay off. Second, the adoption of AI across companies outside the technology sector has been growing. However, use cases have produced varying results across industries, fueling concerns that a broader adoption of AI may take time to develop. And third, concerns have emerged about the formation of complex financial ties among hardware manufacturers, cloud providers, and AI developers, raising questions about the durability of future revenue streams, particularly if the first 2 concerns become more prominent. Simply put, investors are looking for clear evidence of monetization. As investors continue to digest high valuations and look for monetization opportunities, there is the potential that AI stocks could experience some temporary turbulence. For example, investors are concerned about elevated profit and growth expectations. This could place further burden on companies across the space to deliver on those expectations next year. And with elevated valuations across several key tech companies today, the risk of increased near-term volatility could rise should AI growth expectations disappoint. While there are valid risks and concerns in the near term for AI, the long-term picture looks bright in our view. Overall, we believe the fundamentals behind the AI investing theme remains very strong and durable. Recent earnings reports and outlooks from leading AI companies suggest that demand for these technological capabilities is expected to grow rapidly well into 2026, and companies are still racing to lay the groundwork for next-generation computing. For example, the demand for additional computing power to fuel ever smarter models remains stronger than companies' ability to produce hardware, data centers, and energy capacity to meet those needs. Simply, the companies providing the tools and infrastructure that will eventually meet that demand over time appear well positioned to benefit as adoption and AI capabilities expand. Overall, we believe AI computing will continue to be a profitable endeavor for companies and investors over time. If you have questions about your portfolio's exposure to AI stocks and big tech companies, reach out to your Ameriprise financial advisor. Thank you.